Decentralized finance and crypto adoption. What is the role of digital currency within the global political economy? And what are the risks of decentralized finance regulations? Moderated by Sergey Kitrov, Listing Help. With Tone Vase, Analyst, Derivatives Trader and Event Organizer. Irina Burkon, IBLS Global. Raphael Schmertz, BR Capital. And Sagi Bakshi, Coin Mama.
Hi everyone, my name is Sergey Kitrov. I'm founder of Listing.help. We are the largest in the market which help with listing projects on crypto exchanges. Also founder of Blockchain Life and Jets Capital. It's an investing fund. Today we will talk about centralized finance and crypto adoption. In this panel discussion we have got a really good professional in crypto market. Let's everyone introduce themselves, but very briefly.
Sure, my name is Tone Vase. I come from a traditional Wall Street environment, about 10 years, Bear Stearns, JP Morgan Chase. And after that, discover crypto. Now I travel, try to educate about the blockchain. I have a YouTube channel, organize educational events on what is decentralization and what is the future of money.
Hi everyone, my name is Irina Burkon, and unlike what that said, I'm actually a chief financial officer of a company called Metallicas, with a number of products in the US, one being a payment wallet for various cryptocurrencies that you can purchase with debit cards. We are in a process of organizing a bank, a national bank in the US, and our contribution to the DeFi space as it relates to this panel is we've created wrapped coins on a blockchain called Proton Chain, where we can transfer quickly and inexpensively micropayments and macropayments of various currencies.
Hi everyone, my name is Sagi. I'm the CEO of Coin Mama, an OTC broker working globally, selling Bitcoin and other cryptocurrencies. I've been in the space for the past 6 years, love it, believe in the financial revolution.
Hi everyone, my name is Raphael. I'm CEO of BR Capital. We're a fund, we sit all over the world and invest in VC and trading. We have a big trading arm. We do about $500 million a day in trading volume, and that's mainly market making side. We invest VC in DeFi, of course, in centralized finance as well, in NFTs and DAO infrastructure very strongly lately. Happy to be here.
Thanks. My first question will be about DeFi. Is centralized finance a hype, like ICO, IO, or different trends, or it's for a long time? Personally, I think it's for a long time because we see a really large ecosystem which formed around DeFi market, and it solves a lot of problems, removes intermediaries, and makes crypto world better. What do you think about it?
I can start. So, first of all, DeFi is not a game anymore. We can see that even Fed in US, one of the Feds of the state, maybe Irina remembers which one, talked about DeFi, how big perspectives it has. We have banks like Deutsche Bank and Citi and ING talking about DeFi, and not only. So, and central banks are issuing also reports about DeFi. So DeFi is not a game anymore. It's something that has showed its revolutionary powers and the futures that we can see. And I think we are just starting out.
I'll add to that. So DeFi basically is short for decentralized finance. And if those of you that saw my presentation on decentralization, you have to question that. What is decentralized and what isn't? When a lot of people say we're removing intermediaries, no, you're not. You added Ethereum. That's an intermediary for your contract, just a different intermediary than the ones that we had before. Is it faster? Maybe. Is it cheaper? Sometimes it's not. There was a $900 transaction on Ethereum the other day just to move your contract. So now everyone's coming up with competitors. That's more intermediaries because everything is built on top of something, on top of something, on top of something. So to me, is DeFi the next hype like what happened with ICOs? It depends. Does it rely on a token and its own economic economy? Then my answer is yes. If it doesn't, then it doesn't have to be. So it all goes back to who's printing the money, who's printing the token, who's in control of the token, which developers are in control of the token, and which hackers are reading the code, because they will probably be in control of that token once they actually get down to reading that code. So people have to be very, very careful with how they invest their money in the space called DeFi.
I would agree with you in terms of what you should always know what's underneath whatever it is that's happening, because decentralized on the surface may not actually be decentralized in its core. And we are seeing many, many blockchains coming up, and then you think, who's really controlling it? Is it decentralized? Is there a consortium? How many BPs are there? And if that answer isn't clear, then perhaps DeFi is not real DeFi.
Well, Tone, so is Bitcoin decentralized?
I believe Bitcoin is decentralized, but it's a sliding scale. Bitcoin is the most decentralized piece of technology we have in the world right now.
How so? What's the criteria that makes you claim
Sure, I just did a presentation on it earlier today. It's 3 parts. The distribution of coding, having a large number of qualified programmers, all not always in agreement, checking each other's work.
So we have that
mining.
on Ethereum. Ethereum checks that mark.
Mining. Ethereum still checks it, not for long. And running your own node. And Ethereum grossly fails in the ability of anyone in this room to run their own node to validate their own transactions that they're actually following the rules. This is why Ethereum was able to reverse the blockchain in 2016 after the DAO hack, because no one cares to run their own full node.
Well, Bitcoin would also be able to reverse in its first years if they wanted to. I think that we need to look at Ethereum and other DeFi platforms that they will be decentralized in the same. I see them definitely going the same way, or even more than Bitcoin. If you look at Ethereum's the second Ethereum 2.0, what we call, we see already 35,000 plus validators there, and it will be much easier for smaller players to make the network essentially decentralized. So I don't really see a problem of decentralization in Ethereum more than we have it in Bitcoin. Yes, Bitcoin is being supported by large miners, but if we look at those miners, they are very, very big already. So this is also a problem. You cannot become a miner. Yeah, you can run a node, but what is running a Bitcoin node for a regular person sitting here or anywhere else means? So we can download the client and run it. But essentially, if you are not a programmer or a software developer or a contributor, that means very little. So in that sense, I think Ethereum or other upcoming platforms, which we hope will be decentralized, are no less than Bitcoin in that sense.
I think it means a lot. I'll answer real quick because I know we have more questions. It's basically when someone hands you money, cash money, how do you know it's real? How do you know it's not counterfeit? You just assume it's real and you put it in your wallet. Like when someone sends you money over the internet, your bank makes sure that it's real money. With Bitcoin, because it's decentralized, running your own node validates that money. Imagine having like a validation machine on a paper bill. Someone hands you a paper bill, it goes into your pocket actually validates it that it's legit. That's what running your own node does in the crypto space, and Bitcoin is the only project that encourages running that node.
Yeah, I would agree.
It's an interesting discussion, but maybe, Sagi, what do you think about it?
So, first, today the community is quite small. Okay, it's several, I would say, maybe 100 of thousands top of community geeks who play with DeFi. Regulation will probably catch up in let's say 4 to 5 years. Up until regulation is not catching up, it's still nascent technology. Okay, so I totally believe that we should all transfer value over DeFi and use these platforms. This is the future. But today, it's just, I would say, an interesting technology.
Good, thanks. You talk about regulation, and maybe we talk about CBDC. How CBDC will affect in crypto market? Will CBDC accelerate crypto adoption, or it will develop separate?
I will take this one. So CBDC is a giant idea, okay? Now, it has a lot of benefits, but a lot of risks for the privacy and the freedom of people globally. So in the past thousands of years, the governments, the various kinds of governments control the money. Now we have technology that allow the people to hold this power of issuing money and transferring value to each other. CBDC is like nuclear technology. If it falls in the wrong hands of a totalitarian regime, it can be a catastrophe to the society. It's not only the big brother is watching you, it's the big brother that can actually enforce their idea and their political views on each and every one of us, telling you what can you buy, when can you buy, and what can you eat, which restaurants are you allowed to go into. It's crazy, crazy, crazy technology. I do hope that some governments will use it wisely. You know, for example, UBI or the stimulus checks going to the pockets of the Americans. That is classic mission for a CBDC. So the government can really control who got it and who not. And the additional benefit is bypassing the commercial banks. So the commercial banks are going to be irrelevant with CBDC, which is great. I think it's a great advancement. But
I think that's a bad thing. I like the fact that banks are private. I trust the private sector more than I trust the public sector. So removing private banking in replacement for CBDC, which is the central bank digital currency, I think that's worse. Because there is absolutely, like, if a bank does bad, the bank will go out of business. They don't because some governments protect those banks. But if there was a little bit more of a free market, bad private banks would be out of business. So removing the financial transactions from the private banks, I think, is bad. Real quick comment, CBDC, the central bank digital currency, I don't understand why they're creating a new currency. The US dollar, the euro, they're all already a central bank digital currency. It is 99% central bank digital currency, that 1% is physical cash. All they have to do is eliminate the physical cash, and they have 100% central bank digital currency. I don't understand the wasted effort to build a whole new one for every country. I think it's insane.
Totally agree, Ton. But yeah, actually, you know, the digital CBDCs will be no different than current money. There's no difference. They will be able to do the same. The governments will be able to do the same they did, like in Cyprus 1213, what happened in Argentina, limiting. They will have even more power than that than before. So for me, it's understandable why they want to move in the realm of CBDC, of digital currency, that they have total control and transparency without having this 1% or several couple percent of physical cash. So I understand why they are doing it. So
it might be just easier for them to get people off of physical cash by creating a whole new currency and getting people to convert that. And to add up on that, to the answer, that would be incredible for something like Bitcoin, because Bitcoin would be that digital replacement with the quality of physical cash, which is absolutely necessary for a society, in my opinion.
Yeah, Anton, picking up on your idea or on your thought about the private sector, I totally agree, and that's why I love actually what's happening in terms of digital dollar in US. If we take a look at other countries like China, we all know is hurrying up and rushing into the CBDC, but US is taking a different path. US actually said, the regulator, the OCC and the rest, they said, you know what, there is a USDC, which is issued under the regulated entities with the regulated license and banking, etc. So let the market adopt what private sector is offering. All the time that we understand that it's backed one-to-one, it's regulated, audited, let it live and prosper. And I love this idea. And that's where actually the private sector is bringing CBDC and not the country, or alternatives of the US dollar. I think that's a much better approach than issuing the CBDC of the country.
Okay. Irene, I know that CBDC is your topic. What do you think about it?
I wouldn't necessarily say that that's my topic, but on the topic of banks, we took an approach of, if you can't fight them, join them. So the regulations, in America, this is purely American approach. The regulations are there, and it is in our best interest to educate the government, the OCC, the FDIC, the SEC, and the Federal Reserve, rather than try to do something kind of behind their backs and under their noses. So I agree with what everybody is saying. We are looking at a bank that would not have its own currency, but it would service the companies, the blockchain companies that are building this amazing technology. And the conversations we're having with the OCC and the FDIC is to educate them of what exactly does decentralization mean, what exactly does that have to do with compliance, with KYC. And right now, we are writing a paper about what should be authorized activities of a bank when it comes to decentralized exchanges, when it comes to blockchains, when it comes to DeFi, swaps, all kinds of these new and upcoming technologies and products. And I must say they are very favorable to what we have to say about it, and we're being welcomed with open arms to educate them.
Thanks. Our panel discussion about DeFi, but what is the current stage of DeFi regulation?
I mean, I'll jump in, but it depends on what you mean by DeFi. Like, a lot of people see DeFi as yield farming, which is basically you put something other people perceive as valuable, you lock it up in a smart contract, which is accessible to a hacker. We've seen that many times. And then you're earning some kind of other token that somebody else created that you're hoping somebody else will buy from you, and that's how you're kind of printing your own money, most of it going to the guy who created the token. That's one part of DeFi. Another part of DeFi is loans. Again, if you have something as valuable as Bitcoin, I don't know why you would want to loan it out. I mean, unless you're a professional person who has experience in, evaluating risk and loaning your own capital. This is what a bank is supposed to do. You want to do it, that's fine, but I mean, you're taking on huge risks, so you're giving it to an intermediary who you think is going to analyze that risk, and a lot of them don't know what they're doing either, because so many people are building these projects that kind of just came up with something in the space. So it depends on what you mean by DeFi. It has to be a little more specific than that.
So tax is part of regulation, and the tax authorities globally are now catching up with how to tax Bitcoin gains, which is an idea that exists for 11 years. We are still waiting for them to, digest the idea of yield farming and how to tax that. How do you explain to your accountant that you made some profit on a DeFi platform? I mean, I see again, it's in the future.
I would agree with you guys. We have auditor in our fund, and we're explaining them for 6 months now what DeFi is and how to approach it. So it's not easy. They're all catching up, and it will take time. I would compare the state of DeFi now as this open lab where people try to do some mixture of stuff, and it's working. But it's working only for those who understand the chemistry, let's say so. But since it's open and it's permissionless, everybody's coming into the lab and trying their own stuff. Some of them are users, some of them are builders. But we saw, especially since I mentioned, the OCC and the Fed and the largest banks talking about DeFi, understanding already, getting into it, we know that we proved the concept. We saw the future of the finance. It will be open, it will be decentralized, it will be free. That's what cryptocurrencies and blockchain is all about, right? The freedom of the money, the freedom of the finance initially, and then some other niches as well aside from finance. And we saw it happening. Now, how will regulators approach this lab? It's a big question. They are still catching up, they are still learning, they are moving around this laboratory and the chemists and the people using it. And nobody actually has some final answers, but we're moving towards it.
Okay, my last question will be about yield farming because our speakers talk about yield farming. Maybe very briefly, what do you think about future of yield farming? Because we really saw a high percentage in stable coins, for example. Is it will be future yield farming? Very shortly, very briefly.
The future of what, sorry?
Future. Okay,
I'll-
will we
I
have?
don't-
Is yield farming the future? Of course not.
I don't see any future for yield farming. That is going to end if it hasn't already. Yeah,
That's where we agree.
It's all bad.
We agree with Ton. It's not happening when you are seeing hundreds of percents or 1,000% profitability APYs. So what do you think? What people who have some experience, a bit mature people, what they think? It's too good to be true, right? Even today with banks, yields are below 1% on deposits. You are seeing like 10, 20, 30, leave alone the hundreds of percents. Of course, it's not real. I'm not saying that people are not making this money. It's available to do. You can farm, you can earn, you can stake, but it's short term, and we all know that high profits are always hand to hand with high risks, right? So, but this kind of profitability or high yields will definitely not sustain. The cool down of the market, which I guess we are already seeing it, will bring down the yields. Everything will come down, but there will be huge margin. Regardless, there will still remain a huge margin between what you can earn in banks and what you can earn in DeFi. And that's because we are automating a lot of stuff. That's as simple as that. All the industrial revolutions and the following revolutions, they were all based on automation and more efficiency. And that's what we are building here now. Again, we are still in the laboratory, we are mixing things in between them and seeing the results, but the future is definitely more free money.
Yeah, I agree with you. But unfortunately, we have got a limited time. This panel discussion finished. Thank you for our speakers. Let's clap for them.
Thank you.
Thank you so much.
guys.
Thank you.
Thank you.